All right, so welcome to topic 9 of civic education. And we're now headed towards our final two topics, so our final three topics, topic 10, 11, and 12. Then we can start our past paper revision series. So because you are very close to writing your final examination, it's time to now do brute force. And in as much as the book is a little bit disorganized somehow because some pages are missing, let's get the basic knowledge or the bulk of the knowledge first. So we're now just going to use brute force, and I want you to follow with me. Whatever I say, whatever is in the book, use this lecture series as your guide before you go into that examination. And make sure that a week before your examination, make sure you watch all these videos, all 12 videos, and the past paper videos that we're going to do. Then you can actually go into your civic education exam. So last time we touched a little bit on elements, on factors of production, and were able to list all the factors of production like entrepreneurship, land and labor. There are 4 factors of production. Make sure you know all those factors of production. And today we're going to try to touch on the different types of financial institutions that are available. And we're going to start with commercial banks, with a little bit more elements on insurance companies. Then we're going to proceed from there. So financial institutions, by definition, finance, think about accounts and money. And by now, the world is sort of starting to lean more into digital currency like Bitcoin, although there are a lot of fake Bitcoin miners here in Zambia that are mostly scammers, but we're now moving towards hard copy currency, towards cryptocurrency, as well as mobile banking. So think about all these trends that we are shifting. Just in case they flip the coin and decide to ask you questions relating to general knowledge other than just financial institutions. So these are institutions that lend. They should be a lender and a borrower of money from the public. Unless if we're talking about the central bank or the Bank of Zambia, which deals with governments and other banks. So banking, by definition, is saving money in a financial institution called a bank. And I want to mention that banks can also store other variables in a bank other than just money. Like you can also store your will and also variable elements like gold or diamonds in a bank vault. For types of banks, the basic bank or the bank of bankers is called the central bank, and individual countries have different types of central banks. So this is called the banker's bank, because in contrast to commercial banks, which we're going to discuss next, this bank deals with governments individually. It deals with governments individually as well as other banks. So this is called the banker's bank because it does not deal directly with people, but it deals with commercial banks as well as, or most importantly, the government. So let's now talk about the roles of the central bank. So to manage money, apply from the benefit of the country's economy. Remember, we're dealing with a country is an economic entity. As such, a country's finance systems, when a budget is made, when a government budget is made, all that financial capacity has to be handled well. So that's the responsibility of the central bank. If you're thinking about the central bank, think about economics. Remember the definition of economics that we gave in the previous lecture. So it keeps accounts for commercial banks also, which are banks that deal with the general public. It issues coins and banknotes, the cash itself. It clears checks and also transfers money to commercial banks, keeping foreign currency and sending them to commercial banks also. It controls all other commercial banks. So at least make sure you remember at least 4. Because if this comes in an exam, remember social sciences will need direct answers from your textbook. So if you forget something, at least be able to remember something that you can rephrase in your own words, but still stick to this actual script. To manage money supply from the benefit of the country's economy. It keeps account for the commercial banks. So keeping account for commercial banks, you can reword it, but make sure you are maintaining the actual script. So commercial banks, which are all other banks. So in all countries, commercial banks are the ones that deal directly with the public, so the general public, general citizens, by collecting surplus funds from the public and also giving them loans to the public. Loans are a little bit controversial nowadays because of other emerging independent loan entities, as well as village banking schemes. So roles of the commercial banks in contrast to central banking. So collecting surplus funds from the public. So we're now maintaining a cash flow. Central bank distributes the currency. That currency has to be constantly flowing in circulation. In contrast, commercial banks give loans to the public, offering overdrafts to current account holders, offer night shift facilities. For example, we have automated teller machines nowadays, and some banks are actually becoming 24-hour banking services. So offer standing order facilities, offer checkbooks to current account holders. So we're going to talk about the different types of accounts, and offers travelers checks to people traveling outside the country, because you can offer the check, then when you reach a foreign country, you can issue out the check by the bank itself, because certain airports and certain airlines don't actually allow you to carry a certain volume of currency. So these are some of the things that are functional to the public. Okay, so remember, we're going to discuss all these terms. I didn't want to get, for example, you have a current account and you do not have that much money in your account. You can actually borrow more money beyond your threshold account. So offering that's what's called an overdraft. The types of accounts offered by the commercial banks. The most basic account is actually a current account. So current account, the hallmark of a current account, and I want this to stick into your head, is its ability to not generate any interest. So this last piece here does not attract any interest. So this is an account which allows the holder to withdraw money on demand. However, it does not attract any interest. So you can hold your money in that account, much more like a savings account, but it does not generate any interest. And it doesn't penalize you for withdrawing money at your own convenience. So if you want to remember a hallmark of a current account, is that it rarely does not attract any interest. All right, so let's move on to a deposit account. So deposit, you are putting in money. Remember, the banks actually usually like saying banks are actually for entities because they actually want to use your money, and they also want to limit the amount of money that you can access. So here, these types of financial institutions, so these do not allow the holder to withdraw money on demand, but offers a certain period of time. It attracts an interest. So this one attracts an interest. And for example, a good example could be maybe a savings account periodically, in contrast to this large one, which is a fixed deposit account or a large fixed term deposit account. I think my mom has this account and she can only withdraw over a period of 6 months because she doesn't invest in she doesn't believe in investing her money, but she believes in keeping money. I suppose that's the most old school sort of an old school sort of arrangement. Nowadays, parents are usually not entrepreneurs as that for large fixed term deposits accounts. So this allows the holder to withdraw money on a fixed date of agreement. That is maybe after 3 months, and it attracts higher interest on large amounts of money. So the more money that you accumulate, the more interest you're going to accumulate. And usually banks are very happy to have these types of accounts. So this is what we meant by financial institutions. I had to pause the recording. So we also have to take into consideration of other types of financial institutions that may not be banks, but they offer, they do have financial capacity. National Savings and Credit Bank. Remember, these also fall into the category of commercial banks. They provide savings accounts and basic banking services. You have a Development Bank of Zambia. It offers long-term finance for risk businesses or ventures where other banks were reluctant to operate in, for example, agriculture, as well as industrial sectors. So this is mostly a bank where entrepreneurs can find investment capital. So Zambian National Building Society provides long-term loans that enable people to build or purchase a house. So if you want to get a mortgage, which I don't recommend, unless if you have a higher salary pay scale, you may get a loan with the Zambian National Building Society. Lusaka Stock Exchange handles shares and bonds, provides market second-hand shares, helps companies to raise new capital, regulates the prices of shares on the market, and encourages investments in securities. So these are other financial institutions bringing it down to the Zambian level. Okay, insurance companies. So like I said, again, this book is sort of incomplete, but we're trying to get as much knowledge as possible based on these 12 topics before we can start our past paper revision, so that we can at least have a reference point and you can have that core or base and knowledge that you need. So insurance companies, this is a protection against all kinds of risks. So it could risk against fire, theft, robbery, car insurance. It can be inanimate objects like cars, or it can be insurance, human insurance and human life assurance, even if they call that assurance. the insurer, and the insured. The insurer, this is the insurance company itself, like the Zambian State Insurance Corporation, and among others. Then the insured, which is the individual. So the individual taking up an insurance policy and paying monthly premiums to receive that compensation in case of an emergency. So that's what I would say, the premium. So this is the contribution made by the insured to the insurer as the price to cover or policy. And sometimes other insurance companies can act as a way of saving, because you can gain interest after you've accumulated enough premiums over a certain period of time. So a policy, there are a lot of different types of policies, and not just insurance companies. So this is an agreement between the insured and the insurer. I think this is the core basic principles that you need to know in terms of insurance companies. Then you just go into the details of types of insurance, importance of insurance, and different types of insurance policies and insurance premiums that the insurer can use to protect their assets, and as well as their life. Remember, we're walking through. Now we're entering another topic called work culture, and this topic is going to feed into, we're now going to go back to human rights in detail, looking at the financial, different types of organizations that promote human rights, but in a more detailed, and that we're going to do that next week. It will be our core topic 10. And I'll try my best to combine core topic 10 and core topic 11 so that we can finish this very month and start the past paper revision quite early. So work culture, the definition itself, work as well as culture. And we did do culture, remember, which is a very important topic. So these are attributes and values of people towards work. That's what work culture is. These attributes and values can be good attributes or good values, or bad attributes or bad values towards work. And this is what I'm from explaining just now. So features of negative work culture, or you can say features of a toxic work environment. So a person, always start a sentence with a capital letter. So a person employed in the formal or informal sector does not want to work hard, but wants to be paid for doing very little. This usually applies to government institutions, where even if you report to work, you don't report for work, you still get paid. So you can do the bare minimum when you're a civil servant and still get paid. So there's that toxic negative work culture. One spends much of his or her time doing nothing at work. You have clients that you want to see, you have a long queue of clients or patients at a hospital waiting to receive treatment, and you're an office orderly and you are there by the phone ignoring the clients. So this is one of the features of negative work culture. There are sometimes where one waits for supervision. They don't have that independent work culture, where you always need to be supervised. When the supervisor is not there, you have no inability to work. There is zero delegation. So these are some of the attributes of negative work culture. So causes of negative work culture. So lack of pride in one's work. Sometimes people are just given jobs without the proper without the proper training. No wonder you see certain things like the Health Professional Council of Zambia trying to produce licensure exams so that they make sure that people are actually genuine, people got their qualifications without cheating, and people have to show some form of pride in one's work. Poor workmanship in the production of services. Poor workmanship in the production of goods and services. These are some of the causes of negative work culture. And when we say poor workmanship in the production of goods and services, we can have certain people who have various skill sets. If you say a certain job requires you to be very tech savvy, where you are actually working with multiple platforms at a time. For example, you alternate from Microsoft Word, you go to Microsoft Excel, you go to spreadsheets. So there's that workmanship that has to be accustomed. But if you have that poor workmanship, those services or goods, if you are in an industry, won't be produced. So that's a very common hallmark feature of negative work culture. In contrast to negative work culture, we have got some attributes of positive work culture, which is directly linked to productivity and continuous supply of goods and services. So one works hard to achieve productivity targets within a given period of time. So if you are working within your to-do list and you're working within your goals, your company goals and aims of the day, that's actually one of the features of good positive work culture. And one does not wait for supervision, where a manager can actually delegate work to that individual, and that individual will be able to perform well. And I can mention that human resource management is one of the hardest things. The human resource is the hardest thing to manage within any organization. One feels committed to work, and this commitment to work is actually linked to specialization and autonomy of work, as well as the number of years that you've spent working for that institution. So one uses individual initiative, and individual initiative usually comes after someone has been accustomed to that work. No wonder there is something called training on the job training. So that as you are doing on the job training, you can build your employees' capacity to be proactive during their work culture. So there are certain differences between the formal and informal sector, where we usually like to call the more formal sector as white-collar jobs, the white-collar job. So employment can be formal or informal. So the formal sector includes things like the civil service, the government, public enterprises, private companies, and commercial farming. Then the informal sector includes subsistence farmers, individuals who take a living even by doing private work. Nowadays, with the tech revolution, formal sector can also include freelancers. You gain a skill like photography, you are a freelance photographer, or a freelance graphic designer, or a freelance web developer. So that can also fall into the informal sector. So role of formal sector, national development. The informal sector also falls into entrepreneurship. So it creates employment to people who are not employed by the formal sector, because you are not going to wait for big governmental organizations to employ you when you have a certain skill set that can generate income. So promote economic development, as this can lead to the production of surplus goods. And not only the production of surplus goods, but it's able to identify problems in society and turn those problems in society to profit-making ventures. For example, maybe one entrepreneur one day realizes the potential of, identifies the problem of poor waste management, maybe in Kulima Tower or in areas of town. And they find a way to actually convert all that waste, whether biodegradable or not, into finished goods or renewable sources of energy, thereby generating profit. So it not only promotes economic development, but it also serves to actually solve real world life problems. Okay, so this is where we'll end for today. Then next week, I'll try to combine two topics. The video will be slightly longer, so topic 10 and topic 10 and topic 11. So major international human rights organizations. This is a very high yield topic that you have to know. Where there is human rights, there'll definitely be a question, one or two questions. All right, so this has been Brainworks Education. Thanks for watching. See you in the next lecture video. Remember to study. Your destiny and the power to change your life is in your hands.